Good morning. Welcome to the Morning Bell for May 7th, 2026. I am Keith Harwood here for Yellow Tunnel and Tradespoon. Normal disclosures before we get started. Options involve substantial risk and are not suitable for all investors. Tradespoon, Yellow Tunnel, and myself are not investment advisors and not registered with the SEC nor FINRA. If you do have questions about your own personal financial situation, please consult with a registered financial advisor. The information in this presentation is provided for educational and information purposes only and should not be considered trading advice. And finally, myself and or the team at Tradespoon or Yellow Tunnel may have a financial interest in the securities presented in the trade ideas. So please keep that in mind as you evaluate anything that we discuss for your own personal investment or trading portfolio suitability. All right, so a little bit of a continuation of yesterday, it seems. Nothing crazy, not to the extremes on the downside for oil, but we're getting a little bit of continuation overall. Yesterday was a very dynamic breakout type day. Very bullish expectations that everything's going to work out in Iran. I'm not sold, but the market is. Okay, so that's where it is. Is the market convinced it's going to work out? I'm convinced it'll work out. I just don't know if it's going to be this time. And I think this has got that same risk of what we've seen in the past, where we think that we're close to a deal, and then 24 or 48 hours later, we're not. It may be a little closer than it was last time, but I'm not sold that this is going to finality this week. But probability is higher that we are. Right. That's I think the net result is the probability is higher that we are. And I guess maybe the market's just getting ahead of it and saying, look, we're heading that direction. So whether it's this week or next, it doesn't matter. That's the direction we're going. Let's price it in as already occurring. So with that in mind, we're looking for bull cases. Semiconductors have been super bullish. I'm thinking more about what else now people will feel comfortable buying under the expectation of resolution, because clearly the market moves ahead of the resolution at this point. We're buying the rumor, selling the fact. Well, maybe not selling the fact, but we're buying the rumor. So let's see where the systems, the AI is showing signs. Well, for a day, aggressive power traders generally focused on semiconductors still. So I'm a little nervous about those. There's one name, Starbucks, that is outside the semiconductor space. We'll take a look at that. I think that's got maybe the most, the safest look to me. And it's come up a couple times this week on aggressive power trader. So that's usually a good sign. Probability of success versus return on capital. It's really driven by what's the behavior, I guess, as much as anything. Kind of touching on that a little bit more since I don't really bring it up as often. If I've got a stock that is showing signs of bullishness but is not breaking out from a range, I'm higher probability of just saying, look, I can go probability of success. Once we break out, return on capital becomes the play. We're hitting stops. We're in price discovery mode. That's the potential for that big upside. If I want to try to predict a breakout, I'm taking a little bit more risk, reducing my probability of success a little bit, but increasing my return on capital. So if I want to be early, I have the risk that the breakout never happens, but my return is bigger, and I don't risk missing it. If I'm late, I'm more likely to miss it because I'm going to see a low return on capital for something that's already happening, and I feel like the moves are already halfway done, and then it turns out it's only 10% of the way done, like we saw in semiconductors, right? So depends upon your trading psychology. I mean, if you or I or anyone is not willing to buy on that breakout because it seems like it's already moved enough, then I have to be early. Otherwise, I'll miss the opportunities, or I just have to focus on the probability of success and say, look, the return on capital trade just doesn't fit my psychology. I got to stay with probability of success because those continue to be opportunities that I can engage with. I'm still making money even if the breakout happens and the return on capital trade was better. It's just the return on capital also worked. And I can get more return on capital trades. Or sorry, probability of success trades. I can get more probability of success trades than I can return on capital. So if I'm willing to put forth the mental energy of having 6 or 8 trades that are probability of success and then just managing them, that works. If I'm looking for only one or two trades, I may want to dial into a return on capital trade and really fine tune it. And that's an opportunity and that's an option. Problem with that is that return on capital has lower probability of success. So I'm going to have a lot of weeks where if I'm only doing two trades, even though they were both 50-50 with big returns, I'm going to have a 25% chance of taking the loss on both. Or sorry, a 75% chance of taking a loss on 25% chance of loss. Yes, 25% chance of taking a loss on both. So I'm going to have a probability that I just get washed out, or I don't hit my price target and I don't end up with a net return. The more trades I have, the more diversification I have, the more proof that my probability of success trade picks are working because I've got a larger basket to evaluate. Can't evaluate a trading style or trading system or trading returns on one or two trades. I can only evaluate it once I've got enough data to say it's no longer random, i.e., 50 trades, 100 trades. If I'm doing one or two trades a week, it's going to take me a year. If I'm doing 7 trades a week, it's going to take me about a month and a half, 2 months to know that whether it's working. So I can get my information faster, my confidence faster with probability of success. Trends bullish, overbought bullish. I still think that there's a justification for a hedge. That's not been necessary, it turns out, but had we gone the other way, it would have felt really good to have that hedge. And if the hedge allowed confidence to be long the market, then that also worked, right? If my choices were to be long hedged or flat, long hedged worked better than flat. All right. So if the confidence that I need or the protection that I need for my own benefit in order to maintain a long position in the market is a hedge, then hedge. And we'll talk about the hedging structures right now. It's still to me risk reversals, buying a put and financing with selling a call. Because puts are cheap, calls are not cheap. And allowing some time on that, because who knows when the next dip is going to happen. It may happen this week if things fall apart with Iran. It may not. And so having a little bit more time, especially when the VIX is falling, the vol pickup helps offset the fact that I have less gamma. So if I buy, Friday's options, Friday puts tomorrow, and we don't break tomorrow and we break over the weekend, I had no benefit for my hedge. If we do, my hedge pays off massively and quickly. If I go out to June and we dip 1%, it only pays off a little bit, but it still pays off because we should see the VIX rise a point or two. So it's not quite to the same extreme return for a longer term hedge, but it still gives me that protection, and it gives me long time protection so that I don't have to re-hedge every week. I can re-hedge every 3 or 4 weeks, and reposition if we get a big rally like we just did, or add to the hedge if we rally like we just did. Let's see what else. Yeah, the fact that calls are not cheap doesn't mean I want to be naked short calls, by the way, from the naked options. That is a good way to finance a put or to reduce my cash outlay right now. To go out and sell a call if I've got long stock or long other calls. If I've got long 730 calls, I could sell a 750 or 760 to reduce my capital in the market without eliminating my long positioning. Or I could eliminate my long positioning if I'm just happy to be cash right now. But again, I think there's a rotation element right now, and that's that flexibility. All right. 10-year yield coming down a little bit, still not below 4.3. We're trying. So 10-year yield is shifting towards confidence that, the market can start thinking about rate cuts and things in the near future, not in the next, month or two maybe, but maybe that September meeting can be a rate cut, maybe something afterwards. But going back to normal process, if the fundamental picture and macroeconomic picture is clearer. Stocks above their 50-day moving average, still not above 70. Rotation may do that. So if we get rotation, it'll show here as well, i.e. selling semiconductors and buying some of these other less loved financials or something like that on a broad economic boost story. We'll see what the market does, though. If the market's not going into financials, I don't need to go in financials. Crude, just to show it, little weak today, not to, quite to yesterday's lows, got close. Yesterday's low was just below 89. Today's low is just below 90. It's sort of trying to find some support here. Yesterday may have been an extreme move, but it was still the direction that the market seems to want to go. So I don't know what the ultimate low is in crude. Is it 85? Is it 80? Is it 75? Is it 90? Maybe we're already at the price, because it's going to take some time to rebuild supply, rebuild stocks of oil, and re-normalize everything in the market. And if that takes 3 to 6 months, there's no justification for $70 or $65 oil in the short term. There's still the demand there. There's still the need for it. Still going to be drawing down supplies until everything is back to full operation. So I don't see it getting below 80 personally, but maybe it does. Not in the near term. Long term, who knows? What else? Oh, Bitcoin. One, a little below now. Kind of following the process we've been talking about of finding that 81.5 level, maybe a little bit of consolidation or pullback, stair stepping higher. So it seems like this is following the path that I'm expecting. Another day or two, and maybe it starts to run. The hope for me would be that it gets a dip down towards about 79 as a entry point, and then looking for 84, 85. And this next time, maybe it gets the push all the way to 90 without the stall out at 84, 85 before the next stair step is hit, that we stall out. It's going to depend upon how much people want to rotate into crypto or AI or quantum computing or whatever sector. And so we're seeing the bullish flow. We're not seeing the mega bullish flow, not semiconductor level by any means. All right, so S&P is up 0.08% now. Little continuation, new high. I expect to see some call sellers come in today, so this VIX should drop as long as we stay stable. If we drop 1%, never mind. People will start buying the puts that have gotten super cheap. But the VIX is closing in on lows. I think it could, by the end of the day here today, be at 16.5 or even 16 if the call sellers arrive. Wouldn't be surprised if they do. Because right now we're still seeing put sellers as people roll up their hedge. At some point, the money they're putting in for their hedge, they want to reduce via call sales. And right now, puts are at extreme lows. And we're getting to that point now where calls look maybe even expensive instead of cheap, or instead of fair. And they should be getting hit here at some point. Puts are getting too cheap. Usually on the highs here, we see the opposite, where people are engaging on the hedge and they're selling the puts and they're buying the calls. And this number is up at 155, 160. Right now, people are playing this off like there's expectation of tail risk upside with no tail risk downside. That looks like the mispricing to me. A potential for like a 40-point rally, but no low likelihood of a 40-point fall. That seems unlikely to me. More likely that we've already gotten to this extreme point. We got the RSI up to 75. Feels like even a retest of the 10-day moving average would not negate the bull trend. It would just be more likely than getting a 755 or 760 or 750 even at this point, barring a fantastic deal with Iran. We'll see. Sorry, that was my really poor Trump impersonation. Small caps down a little bit. XLE continues to get a little bit of money flow out. XLF continues to be stagnant. XLV continues to try to find a bottom. XLU continues to be non-interesting. Actually, a little weak here in XLU. There's not a lot here. All the money flow just continues to be so focused on semiconductors, but there's a little profit taking today. And QQQ up today in spite of semiconductor quote unquote weakness. I call it quote unquote weakness because it's still strong and it's just a little pullback, and it's not even, it's random walk kind of pullback, little profit taking. Micron down 2%, drop in the bucket, still in the middle of yesterday's range. Nvidia yesterday had a great day, and it's just sitting today, inching higher. Intel has been on a tear. Down 0.75% is not a bearish day. It's just a pause day to get that stability after being overbought with an even more extreme RSI. RSI is still extreme. We're slowing it down. When I go to the aggressive power trader names, it's Micron. I'm passing. The RSI is 79 and down 2% today. It's not enough to make me confident that I've got a tight stop, and I don't want to sell a put credit spread unless it's like 550s. I don't get any money for that. STX, same sort of story, down 3.5%. If I want to sell a 680 put, I don't get any money for that, and so I don't want to get engaged. I don't want to buy the call. They're frankly expensive, and they need that continued dynamic breakout type behavior that we've seen for the last 4 days. I think let it take a breather. Texas Instruments down 1%. Maybe a little safer here. We haven't gotten quite as explosive. All the explosion here was on earnings itself. So if I had to pick one of them, I'd go Texas Instruments from the safety perspective. But knowing that it can be correlated to everything else and get pulled back to 260 or lower, and I'm still not getting that much premium for selling a 260 put. Next week's 260 put in Texas Instruments is 65 cents. It's just not worth it. So we got the last one. It's Starbucks. Now, Starbucks had good earnings, and it's been consolidating, and it's a little dip here. And the support, to me, looks like it should be here at 101.5. Tomorrow's not enough time. 11 cents, 19 cents for the 101 put. But next week, and this is a week long, you can collect 26 cents for a 101 100 put spread, or 25 cents. That's a decent return on risk. 33%, risking 75 to make a quarter. Right now, the market's not particularly liquid. We'll keep an eye on it for the day. This afternoon, if the market's holding up okay, maybe a Starbucks put credit spread could work. That would be the one of the three for me. It's not breaking out, so I don't need to buy a call. Rather, I can just say it should continue to hold the support and move on from there. All right, 1 second. All right. How about weekly power trader? We are at our list, and it's going to be shifting around next week again because we're going to get different money flow. Amazon still just marching higher. Call debit spread kind of works. Put credit spread kind of works. Everything kind of works equally. A stock or works. It's all been working fine. Given the market being overbought, I'd prefer the put credit spread unless we get above Tuesday's high. CSCO took its dip yesterday. I think the call spread that Vlad's got on makes sense here, the 90.95. My biggest concern with it, and the only concern, is that the premium is not going to erode as we get closer to expiration because we got earnings next week. So earnings on May 13th means that volatility is going to continue to creep up to keep that premium present. So even with a call debit spread, I still need price appreciation to hit a price target. So that 96.5 level maybe gets to the 3.5 today, the $3.5 for the 90.95 call spread. Maybe by next week it can be achieved on a move to simply 95.75 or 96. There's a little bit of theta that's going to come out. It's not going to be a situation where the theta implodes on Monday, Tuesday, Wednesday of next week. It'll implode on Thursday. So having the directional bias, I think, is still good. I think the call debit spread still works just off of the technicals and the prep for earnings, but I wouldn't necessarily expect it to pay off quite as quickly as if there was no earnings next week. Coke, kind of like Starbucks, it's just about determining what our support level is here. And I'd say it's 70, just below 78. Starbucks feels a little safer to me, but 77.5, 77, I guess 77, 76, or real tight 77.5 77.5, 76, something in this range could work. Starbucks feels better than Coke at the moment. But they're kind of similar in many ways. Good earnings, shopping range. So Starbucks was good earnings, shopping range. Just maintaining a little bit higher point of the range and had more buying come in after the earnings as opposed to selling, profit taking right after earnings in Coke. OKE is killed by the oil price pullback. I was thinking that would work off just the AI money flow. Some of the reason that we're buying semiconductors, apparently not. It's just going to be focused on crude oil as well for the power producer here. So let it go. Texas Instruments, again, looks decent. Get above yesterday's high, could be a call. Otherwise, the put credit spread just doesn't necessarily pay me enough money. At 265 is the highest I'd consider. It's borderline, but if I have to go down to 260, I'm in trouble. Starbucks looks better. And then Walmart. No real reaction, major reaction to what's going on in Iran here, just a very slow appreciation. And then that's another, it looks like a put credit spread. We've dipped down. We're starting to find buying again, higher hot lows, higher highs, but very, very lightly so. 127, 126 is almost 20 cents. Based on return on capital, Starbucks looks better. Based on safeness of the play, Walmart might be a little safer. So maybe the same expected value, but a little more return on capital for Starbucks. Okay. So yeah, I've been trying to put out that thought, like I think it was prompted by Fred. It's like gun to my head of all of the trades that we're seeing right now in the aggressive and weekly power trader and all those things. For me, Starbucks looks the best. It's coming up a lot on the aggressive power trader. Walmart started there on the weekly power trader and hasn't been coming up anymore. So the model is still seeing continued money flow into Starbucks. And on the dip today, it's still holding support and looks like an attractive entry point. So I think I think that's the safest, best looking trade of the AI generated list for the day for me. All right. Let's take a look at earnings. Yesterday's earnings that were just ones to watch were AppLovin, didn't move. So we talked about it yesterday near the close. Like, this is a stock that can move or it cannot. And this is one of the lowest moves, second smallest move in 2 years. We've had 45%. We averaged 14%, partially by that 40 because of that 45% move. And today's the 2%er. So it's a blah, who cares day for it. Everybody that sold premium was right. And I had no strong opinion, and I'm glad I had no strong opinion because if anything, I might have considered looking for like a 10% or 12% move, and that would not have worked. IONQ pulling back slightly, another one that just had no predictability to it, and it's a nothing day. ARM, no predictability to it. Today it was down 8%. Underperforming the implied volatility, looked like a possibility of an iron condor if we went way out there, but not as strongly so as McDonald's, which we'll come up to after Snap, which didn't move finally. Not bullish yet. And then there's McDonald's, up 0.3%. So the iron condor was the play there. It ended up moving even less. Pre-market, it was testing the levels. Got up to about 295, I saw pre-market. And actually during the day, it got to 291.40. But now the iron condor is just decay. 9 cents on the call credit spread now, 2 cents on the put credit spread. And it's just a matter of timing the exit as it gets cheaper and cheaper, I would not worry about it hitting either of those levels, but I wouldn't want to sell the 270, 267.5 put credit spread for 2 cents. So usually when I've got these on, it's like, I got it right. I'm happy I'm right. Just in case, I'll cover my spreads for 1 or 2 cents, So being penny bid or 2 penny bid for the 270, 267.5 put spread, and leaving in a bid for the call debit spread to cover it, maybe a little higher given that we tested some upper range this morning, like 4 or 5 cents, and then just wait. And it should probably get hit by the end of the day today. Or if I'm impatient and I want to move to something else, there's nothing wrong with just taking the win now. The call credit spread, I feel like maybe a little bit aggressive to pay 8 cents, but then I'm kind of chopping away some of the projected return from the starting point. But the put debit spread, 1 or 2 cents, that should get hit at any time. And the call debit spread for 4 cents, that's a nice way to book the win and maybe not capture it all, but free up the capital for other trades. All right. So, yeah, excuse me, all in all, I think kind of things look okay on those earnings trades. And then I'll just pull back up Disney. It pushed through a little bit for today. So the target was that 108 level from 2 days ago on Tuesday. Now the 105, 108, 111 call fly is, let's see, 576, so 62. Sorry, 476. So 40, about a buck. Yesterday was about $1.20. Now it's about $1. More than anything, it's just kind of managing it now. I wouldn't be surprised by a pullback, but if it holds these levels, it might be better just covering it. If we push through the 111 strike, as much as I hate exiting early on it. 1 second here. Sorry, getting pinged. Somebody wants to chat. Yeah, overall, I mean, I think this market's just taking a breather for the moment, and it's logical. S&P's unchanged, QQQ unchanged now, IWM down 0.5%. There's nothing crazy happening this morning other than little continuation of the downside in oil. And ags pulling back a little bit, and silver being bullish. I mean, on my list of movers today, yesterday it was like all these stocks and sectors were moving 2.5 or 2 standard deviations. Today there's a handful moving 1 standard deviation or more, and they're ags down, silver up, and crude down. Outside of that, it's a lot of smaller moves to start the day. So today feels like the start of a quiet day, unless a headline pops in that creates a new shift in the market. All right. So, considering that, I think having some theta to collect today is probably the most logical. Those put credit spreads, Starbucks could be earlier in the day. It's only going to decay by a penny or two for next week, but it still could be an earlier trade just to have a little theta collection. If I've got long calls that have worked, I think taking the profits on them now and then reevaluating near the close or tomorrow would be a logical thing. And that's why I still say that I think today we're going to see call sellers start to come in and this VIX start to pull down. So where I'm looking for that to really pop in more than likely would be June 750 range. We're not getting much volume here to start the day in June options. Geez. 20 minutes of the day and this little volume in June. Are we doing a lot of May? We're not doing a lot of May. Somebody's selling a bunch of May 725 puts, it looks like, or 725, 710 put credit spreads, it looks like. But other than that, there's not much here major in the market. Nothing crazy at all. We're getting a lot of dailies. Yeah. I mean, all these 0 DTE options have pushed so much of the volume to the day of the trade. And you can see actually some of this erosion. So like this Theo model updates every few minutes, and you can just see how quickly people are starting to come in and just selling this premium for today, where all of these values now on the ask are below the quote unquote Theo. Once the Theo updates, it'll just be saying yes. Implied volatility is even lower and pulling back down. So a lot of people coming in with 0DT options today and just selling the options. Yeah, so the big spread in Starbucks puts is certainly there. The biggest thing for that is just knowing a rough idea of value, um, knowing that really it's both of them are kind of wide. These ones are really funky. Not there's no volume on them yet. It'll tighten up during the day, but if I put in an offer right now at 35 cents, it may actually start to tighten up the legs as people try to see if they can uh, scalp it, or 30 cents, something close to market. If I put it in at 50, it won't tighten up the market. But if I put a 35 offer, a 30 offer, knowing that it's probably worth about 25, 26, the closer and closer I get to marketable on it, a lot of times the legs tighten up too as people try um, to trade around the offer. So, just as a like if I put in a 20 offer, all of a sudden these markets would tighten up because somebody would know that they could buy the 101 puts for probably 90 cents or 92 cents or 93 cents, somewhere near value, and then immediately try to sell the 100 put out and the leg out of the trade. I had a guy that I used to work with that's what he does for his job or whatever for himself. He sits there and he watches the complex order book, and he gets like a signal when something is trading or is offered near the fair value or near the mid market. And then he sits there and says, okay, if it's near mid market, I'll try to leg out of it or a leg into it and then use the complex order to get out of it. So putting in an 80 bid on the 101 put, knowing worst case, if he has to hit the bid, he ended up buying that put spread for 26 cents. And then see what happens, right? Yeah, on like a value perspective, the 105s I think look okay. The problem with buying the call right now for Starbucks is I'd be early, right? Need to get back to the highs or near the highs to make a profit. And if all we're going to do now is consolidate and chop in the range, then getting to the highs gives me a small profit, or getting back to 107 gets me a small, actually a reasonable profit at 107. But what if we only get to 106? And I actually lose money even though the market went up $2 over the course of a week. So I don't think it looks bad, but it's just, there's nothing telling me yet that Starbucks is bouncing. I mean, it kind of goes to like what we experienced with, and not Murphy, it was 2 weeks ago, Walmart 2 weeks ago, where the little pullback looked okay to buy into. And if we got to the recent highs or the previous highs, it could be a good return on capital, those 132s. Instead, we had one more down day. And so it ultimately got back basically to a break even by a week later, with the price up from 130 to 132. So the price rallied, a buck and a half, $2 from the like the close on that Friday till the close the following Friday, and made no money. So if it takes a week for Starbucks to get back to the highs or near the highs, all I ended up with was saying it rallied 2%. I was right, but I bought calls, and so I was wrong, you know? So yeah, I think like, that's May 8th. Yeah, so they're already starting to tighten up a little bit here. Now they've got, and the market kind of giving a little bit better bid on the 101 put. And I mean, every once in a while, if I'm really trying to get the market to give me a real value, I can always. And it's not that I want to buy the 101 put, but I'm okay with buying it if I buy it for 85 cents. So I put in an 85 bid and say, I know I'm getting an edge here, and I probably get right back out for a small scalp. I'm not saying I like the downside, but if I put in an 85 bid, everybody else says, oh no, I'm 86 bid. It's like, oh, okay, well, never mind. Now I know I can get my put credit spread. And it's not about, it's like, it's not a false bid. It's just a bid to say, well, if you guys don't want to sell this to me, maybe I'll leg into buying something first and take the other side and see if I got a real edge here the other way, just off of opportunity there, Um, but ultimately, the goal is to end up, short that put credit spread for 26 cents, not to end up long the 101 puts for, I don't want to be 95 bid. I don't want to buy them for 95. But if I got hit for 85, I know I could probably get out and scalp it real quick. So I'm offering to scalp the trade while I wait for the markets to tighten up, effectively doing what the other guy that I used to work with does, where he says, hey, by the end of the day, I don't want to be long these for 85, but I know there's an offer um, on the put credit spread. So I'll start by um, seeing what I can do, or there's a bid on the put credit spread. So I'll see what I can do. Let's see what else. Yeah, I mean, it's just kind of playing around with the market a little bit on it, just to try to see if you can get the market makers to engage on the strikes. And sometimes they do, and sometimes they don't. And if I get hit, so be it. But if I don't get hit, I'm okay with it. Um, and you'll see it like right now, that spread they're trying to show that the value is 22 cents, and it's like they're showing the market bid to bid and offer to offer. Oh, the value is 22 cents, and they'll do that to try to convince somebody that the value is 22 cents instead of 25, so that if they know somebody might be coming in to sell it or it has a working offer, they look at it and say, oh well, mid-market value is 22 cents, so I should be offering it 21 or 20, and they're happy to buy it for 21 or 20, and they won't sell it for 22. They won't sell it for 25 unless they can buy it back for 24 on an edge. So kind of using our old market makers strategies to try to get the market makers engaged to get the fills. So it's like execution games, I guess, to a certain extent, right? Um, yeah. So I mean, overall, markets I think are slow today, and just kind of see what they do. Watch the headlines. Watch oil. I'm not that intrigued by Microsoft up 2.5%. That's an interesting one to see. It's going to get. I think Vlad's back to a break even on the stock, and I think he basically broke even on um, the earnings play, or small loss on the earnings play. So net for a chop to be breaking even, that's not the worst feeling in the world, I suppose. Just long calls in Microsoft have been burning, but long stock is now breaking even. Short put credit spreads net worked, and yeah, just that's kind of the nature of the market. When you feel like there's not the momentum to the upside, the put credit spread is just going to be the strategy to deploy. Let me just check and see how cheap those are now. Just wide. Yeah. Likely look to exit the MUR. Probably exit it anyway, even though it's down quite a bit. But I gotta see liquidity on them before we exit those. So if that liquidity doesn't clean up today, then maybe tomorrow instead. And because selling the bid on those, that's like selling them with the stock down at 34 or 35. That's not good execution either. But we'll find other opportunities out there. And just kind of keep plugging along, looking for them as they arrive or as they arise. But yeah, I think if I had to pick one trade today, it would be the Starbucks put credit spread for the moment. Any other stocks moving today that are particularly intriguing? Let's see. It didn't work. Let's try. Big volume today. Fortinet. Oh, we had some earnings that I was going to touch on. I don't see any good earnings trades today, just so you know. I'll say that ahead of time. Fortinet had really good earnings last night. Open Door Technologies, $5 stock. This is about as interesting as it gets. There's not much here. Coinbase was hoping would be interesting. It's really not. Sometimes 15%, sometimes 5%. No, it's a coin flip of which way we go. No edge. Rocket Lab, sometimes low, sometimes every once in a while you get the crazy 30% move. Market's not pricing in a high level, it's pricing in higher than the average because there's the chance of a 30% move. And so again, I don't see an edge here. And then the trade desk, when it was like an $85 stock, had a lot more excitement to its earnings. A lot of people were really engaged on it. And then that earnings in August of 25, where it got crushed down to 55 and started this slow decay. They're probably hurt by other AI advancements and other ad placement strategies that don't go with their business model, is my best guess. But overall, people aren't engaged in the trade desk anymore. They've kind of moved on from it. We got that big move down twice, once in February, once in August, and it kind of killed this stock from an earnings play perspective. So I don't see anything particularly interesting there either, unfortunately. And there was just really not much out there. Tesla, let's see what Tesla's got right now. So pressing the breakout, pushing above the 100-day moving average, pushing above the April 17th high. A lot of talk about, IPO with SpaceX and everything else. I mean, overall, this looks like the market's rotating from some semiconductor stuff to other tech, right? We're seeing Apple up today, Tesla, Microsoft, a little bit of Nvidia. Netflix is okay. So like Mag 7, up 1%, getting a little bit of a push here. So people moving a little bit to the other big tech. All right, let's see what the premiums are. For a day, that doesn't look, I know it's only a day, but a 395, 392.5 put credit spread for a day is still a quarter. So it's still 11%. 11% for a day and a half. It may not be enough. If I go to Monday, I got the weekend risk. If I'm going to go to Monday, I might as well go to Friday. Then I got to go lower. 385. 40 cents. I don't know if that's enough either. Not for a week. I don't see anything I love right now to hear. I'm sorry. Yeah, I think it's just if I'm bullish, like if I think this rotation is going to continue for more than just the day, then I can look out at a June call spread. Implied volatility is a little bit elevated, not bad. It's close to the lows, but it's elevated off the lows. Coming up a little bit today, like a June call spread targeting the big strike at 450 might be a decent strategy. It's not great, but it's decent. Like it gets us up to here, like a 415, 450 sets up for 11.5 bucks right now. So I need to get here to break even by expiration, like around that 426.5, 427 range. The chance it can push to 450. A dip is going to take me a lot to recover from. It's the toolbox day for Tesla. Probably not bullish yet. It might update more bullish tomorrow, but that's saying it was already starting to see some longer term bullishness, but then we made that move already today. So it should update a little more bullish tomorrow. Projected open and projected to dip today. So opening near the highs and then closing near the lows. Yeah. But we've already gotten above the projected highs. So I'm not sure I love the model's projections for today. I think overall it's just probably not much that I see there. Yeah, let's see if there's other model ideas. Maybe check in on LRCX. Seeing a lot of semiconductors still. Trying to get away from those. Let's see if any of these guys are interesting. Yeah, let's try these guys. Akamai is still semiconductor. I shouldn't have even pulled it up. That's weird. It's got a weird shape to it, but in the short term, it likes LRCX, so I'm just pulling it up because of how much it likes it. Yeah, that's pulling back a little bit, but I think the model it's a model grade B, usually a decent model, but the shape of the model, that's not a normal process. SPY chop, that's not interesting. H&R Block chop, that's not interesting. Gilead Sciences, that's interesting. FedEx, bump and fade, so probably not interesting. Let's check out Gilead. Earnings are today after the close in Gilead. Blah. Well, let's see if the earnings are anything interesting then. I didn't see that on the list. My earnings stocks. 6% move more often than not bullish. How long has it been bullish bias? Really about 2 years. All right, so if I wanted to try to take that bullish bias for 6%, I'm gonna $8 from the close, so like around 143. That's right at the highs. That's not bad. A little bit wide. It's cheap to if I could execute a 140, 143, 146 call fly is a cheap way to get in. It's betting on anywhere between 4 and 9% roughly. Yeah, I mean, that's okay. So like the 140, 143, 146 value should be around a quarter. Should be. It's going to be hard to get into unless these markets tighten up more. You can see there's just not a lot of option volume today. Do I have a filter on this? I might have accidentally clicked something. There's just no volume. Not a lot of people playing it. No, I don't see any great model ideas because most of the model ideas are still focused on these semiconductors, you know? And so if I just filter down and skip all of the things that are semiconductor, skip Flextronics because the vector is ridiculous. If I say I'm not touching semis or oil, it's a pass, 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 pass. Best Buy was nothing. Humana maybe. I don't even know what Parker Hannifin is. Let's pull that up. Pass, 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 pass. Maybe Estee Lauder. There was nothing there. Pass, nothing there, nothing there. Maybe General Dynamics. All right, we'll try a second run through. Okay, Humana might actually be a decent one. This is not a good forecast. Estee Lauder, double check it. General Dynamics, we'll double check it. All right, let's try these three. Humana. Good earnings, good support, little profit taking today. And in a sector that has not been getting huge buying, but it's been money flow in Humana. Looks like it's going to stall out though by 270, but that could still be a June call spread. 245, 270 is $8 just under. Decent return on capital. Potential for a double. That's okay. Estee Lauder. Might just be getting started after good earnings. Might. If so, maybe it can start to get that magnet pull towards 100. What's the open interest on the hundreds? Not enough. I mean, if I was going to have to do something, I guess I'd look at a $90, $100 call spread because at $2, it works really well if this momentum continues. So a little further out of the money, but still call vertical. And the projection's up over 100. So that would work really well if the projection's right. And then General Dynamics looks really bullish for a move towards 400. 400 seems out of this world right now. I don't see 400. I like 370. The forecast I think is too optimistic here. I don't love anything today. Sorry, just more Starbucks is continues to be the one that looks most logical to me, and the rest of them just I feel like I'm just putting something on just to have something on, you know. What are the 1-day 27.5s? Yeah, not quite cheap enough. And say maybe just play off of VIX falling again for another day if it's cheap enough. Like if we get a deal, it could drop to 26.60, but that's not for paying 15. If it was paying like 4 cents for the 27.5 puts or 2 cents for the 27 puts, but that's not at 5 cents and 15 or 20 cents. That's too expensive. So there's nothing there. Yeah, sorry, not a lot today for me. Just see if I mean honestly, I would love to see some market rotation today. Continue where like semiconductors are being sold, and then there becomes a new theme. Like if the market started saying, let's buy all these financials, which they're not. But if they start buying some of the financials, that would get me more excited because then I know that we're moving away from tech and into a sector that we haven't been buying, and that money flow may continue. You know, when we switch from semiconductors to semiconductor adjacent, it's okay rather see them going into Palantir, which they've been selling, so it's a little bounce back, or if it was like going into IONQ more, which they already kind of did ahead of earnings, so there was not much left after that. But yeah, I don't see a new like major rotation theme appearing yet, other than that initial light profit taking in semiconductors and moving away from energies, which doesn't pose a lot of like return on capital trades. It's more just, okay, a lot of stuff stagnant, so probability of success trades, right? So, all right. I think with that, if you guys are good, I'll let you go. Vlad will be back on for the close today. And yeah, we'll touch base soon. Best of luck in this market. I just don't see a ton today, but yeah, I think the Starbucks thing is okay. Honestly, you got me just in time, Fred. I mean, I think there's a lot of signs that it is close to being done. We've had this elevated RSI for so long, but I need like 2 or 3 days of. I mean, if we do like inside day today, lower low tomorrow, that may be a good indication that SMH needs a little bit of a pullback instead of just consolidation. I mean, as it currently stands, it just seems like it needs consolidation. But I thought that, a week ago, and it got a little bit of it before another big bump. So it didn't. And I thought it, 3 weeks ago, and it never even consolidated. So, right now it's very bubbly, but buying it's still working. And so, I mean, given how bubbly it is and how high the RSIs are and how overbought it is, I want to avoid it like the plague and just know that even if it runs, I'm not going to fault myself for avoiding that risk to the downside. Because if it does happen where we end up bombing the hell out of Iran, which we said was the alternative to a deal, I could see people coming in and just sell everything. And all of a sudden, semiconductors drop off to 480, So the downside tail risk is just too much. Vlad has MU for today. Yeah, and I think that's true. I mean, if Vlad's got MU for today, all right. Is he? When did he get in? I mean, for today, it looks like it's still working. So let's see. Yeah, the log's not working. There we go. 659. So Vlad has it for today, but I wouldn't be surprised if he's also exiting today. He already picked up $20. Let's see if orders. Yeah, he already sold out half. So quick scalp on half. The other half may get filled here even by the end of the day if we keep this momentum going. Yeah. And he closed out that Microsoft, so got that back up to a small profit. That's nice. But yeah, overall, good grab by Vlad, and he may get filled on the rest of it here in 5 minutes the way this is starting up again. Difference in approach. I mean, Vlad was willing to take that risk, and he's already gotten rewarded for it. I am just not willing to do it. So, yeah. All right. Yeah, we're getting a bigger push in NVIDIA now too. So, yeah, the semiconductor buying is resuming. No dips to be had, apparently. People are buying into them. All right. Well, we'll see how it goes, right? All right. Thanks, guys.